Today's episode of The Rise, we sit down with Craig Shapiro, founder and managing partner at the Collab Fund. Founded in 2010 out of New York, Collab Fund has become one of the most original forces in venture. Early in seed focus, they back companies at the intersection of for-profit and for-good across food, climate, health, and money. With over $1 billion under management, they've helped launch category-defining brands like Sweetgreen, Beyond Meat, Lyft, Reddit, Blue Bottle, The Farmer's Dog, and more. Known for experimentation, Craig speaks through a $200 billion climate fund, the Shared Future Fund, and a new AI residency here in New York City. At its core, Collab is a lab for what's next, and Craig remains one of the few investors equally trusted by founders, operators, allocators, and more. We hope you enjoy. Craig Shapiro.
Alex Klein.
Thanks so much for doing this.
Thank
today.
you. Thank you for having me. It's so good to see you.
You have this mantra.
Yeah.
Better for me and better for the world.
That's
How did we come up with that mantra?
Yeah, I mean the short version is this notion of aligning interests, I think is kind of the most powerful force, centrifugal force in kind of business and beyond. And I do think that the best and brightest entrepreneurs are building not just to create financial returns, but they're trying to build a legacy. They're trying to solve a real problem. And so, yeah, and yet there wasn't, when I started Collaborative Fund, there wasn't a fund that was doing both of those things in a way that brought kind of rigor and discipline. You either had kind of impact investors who really cared about doing good in the world and were kind of a champion for impact, or you had these kind of like cutthroat financial investors who were just focused on financial returns. And for me as an entrepreneur, I like having the best of both worlds, and that didn't exist. So I drew this kind of Venn diagram where the intersection of those two things were the thing that got me most excited. And that kind of became our calling card. Yeah.
I love it.
Yeah, thank you.
I love it. And you started in New York.
I started in New York. After living in the Bay Area for, a decade, it was time to do something, start fresh. I had kind of spent so much time immersed in the Bay Area that New York there was a new energy, In this time, I started the fund in 2010. You had new companies like Etsy and Meetup and Kickstarter. There was like an energy here in the city that just felt electric, and it also felt closer to culture. New York is kind of the epicenter for music and art and architecture. Totally. And it just the vibrancy just was, it attracted me to the city in a way that, I don't know, that I also just felt like New York, it was an opportunity to create an early stage venture fund in an emerging pond, as opposed to one that was, rich with so many great early stage investors. So you had other kind of firms just coming alive at that time, whether it was Josh starting Thrive or David starting Box Group, Lear Hippo. There were other kind of managers kind of just getting their engines started.
Sure.
So yeah, it was a great time here in New York. And it kind of feels, in some weird ways, it feels like we're going through a second wave of that right now.
Totally.
Yeah.
Totally. That's a big reason behind why I started Nucleus. Actually, is this whole very bullish around the thesis that the venture landscape's going to look incredibly different in the next 3 to 5 years, and I think it's going to be dominated by breakout funds like Collaborative Fund, all the way down to the emerging manager talking to LPs going through a race for their first fund.
I mean, honestly, what you're doing with Nucleus, I think from a timing perspective couldn't be better, because we're going through this generational transfer where emerging managers, and there's an opportunity today that I don't think existed even when I started Collaborative Fund. So yeah, you're onto something.
Thank you so much.
Yeah.
Making days over there, Craig. Making days over there. You mentioned a couple of the other firms that started out. So we just put out this graphic that was highlighting some of the firms that were a big part of the New York story. And your vintage, the 2010 vintage, you mentioned David, Tish starting Box Group, Josh Kushner, starting Thrive Capital,
Mm-hmm.
Collaborative Fund in 2010. I think Primary Ventures got started in 2016.
Mm-hmm.
I think we have a handful of firms that have started since 2020
Mm-hmm.
that look really promising, that look
Mm-hmm.
really interesting. How can you just tell me about this evolution of the New York venture ecosystem and just like what it's been like to be a part of that?
Mm-hmm. Yeah, I mean, New York, I think, is the most fun and interesting place to build, both as a venture firm, but also in the, actual business building. And I think it wouldn't be complete without giving proper kind of credit and just a head nod to some of the OGs, looking at Union Square Ventures and some of the other firms that have been around that kind of like laid the groundwork in a way that, enabled us to kind of come online. And it was interesting, like the some of the kind of foundational building in this city kind of opened new doors. You had someone like Fred Wilson who was blogging every single day, and as an emerging manager at that time, it was like a free education. And I think about, to your point, so many firms have been started since 2020, and we're going through again like this new kind of renaissance of kind of emerging ideas. AI obviously is shaking things up and creating new opportunities. And yeah, I look at, BetaWorks is another group that's been around for quite a while. And you look at just some of the diaspora, you look at Nick Churls with Asylum, like it's a really the roots kind of matter, and you can see kind of what that has, manifested, both in terms of that, let's call it the cohort that I was a part of, as well as kind of some of these newer emerging managers. And there is much more of a, in my mind, more of a collaborative ecosystem in New York than in the Bay Area, where, it just is, yeah, it's like venture is intermixed and woven into culture in a way that feels different and more kind of positive sum as opposed to zero sum in the Bay Area.
Totally.
Yeah.
I think venture is very competitive,
Mm-hmm.
and it does bring out, it could at times bring out the worst in people.
100%. 100%. Yeah. Anytime money is involved, emotions run high and things get competitive. But I do think, talent is so key, and getting that right, and hiring both at a firm but within companies. And that's why I'm like so happy that we're connected, because what you're doing is great. So,
100%.
Yeah.
No, thank you so much. I'm going to list a couple of portfolio companies.
Okay.
Really quickly.
I'm ready.
IPOs.
Okay.
Sweetgreen, Beyond Meat, Lyft, Reddit.
Mm-hmm.
Some notable acquisitions include Scopely,
Mm-hmm.
Blue Bottle.
Mm-hmm.
I told you that one of the darlings in your portfolio who will always have a special place in my heart is the farmer's dog. I believe you co-led the seed
Mm-hmm.
on them,
Mm-hmm.
which is one of my favorite companies, period. In full transparency, hired their first VP of product, who slid over to, now he's owning product and engineering. I think he was promoted once or twice, still over there. Shout out to Raf, and worked with Katie really closely. He was one of my favorite people in the New York ecosystem. But I love that group of companies. More recently, saw you were in a company called Loyal,
Mm-hmm. Mm-hmm.
which kind of parlayed well off of the farmer's dog in terms of, it looked like longevity for pets, which I thought was super interesting. Can you, just out of curiosity, give me a reaction when you hear those names and winners?
Yeah. I mean, it's hard. I mean, my just overall reaction is it's so fun to, have been a small part of some of these kind of category defining businesses. You think about a company like Sweetgreen. This is like from the time that they started at Georgetown University with one location to today, it's like it's been a really amazing journey. And those guys built a brand that has withstood the test of time. You look at kind of the competitive landscape, whether it be Chopped or Just Salad, like those kind of came and went with like I don't know, it felt more ephemeral, whereas Sweetgreen feels like it's an enduring business that is got just massive potential even today. Obviously, Reddit is, holy cow, that business continues to be a darling. And, people don't think of it as an AI company, but the reality is when you look at the training data that most of these large language models are using, Reddit is one of the primary sources. So that was a really, really fun one and an odd one, right? It went through YC, got acquired by Condé Nast, spun out of Condé Nast, like it's got its own rich history. Farmer's Dog is also a fan favorite for me too. And you're right, we co-led the seed round in that. If you can believe it, I think it was at a $7.5 million post money valuation. Yeah, and that business is a multi-billion-dollar business today. So, this is a business that when we first invested, a lot of people were like, pet food, like, is that really a venture backable business? Come on, like, and is it, is there any IP? I mean, it's just food, and like, what's to stop, Petco or any of the other, food companies, pet food companies from taking market share? And they have just executed so well that business is more than category defining. I think it's going to be, it's going to be one of the most enduring businesses for a very long time. Loyal, you mentioned, is a more recent one. Fun story around Loyal. Celine, who's, an absolute superstar and so smart.
When were they founded?
They were founded, I want to say 2017.
Cool.
Yeah. So not that long ago, but it's an amazing business. And it's one where, people talk about product market fit. Just opening up a wait list of like, who would spend money to extend the life of their dog?
Totally.
Unbelievable. And the willingness to pay is virtually limitless. A fun anecdote there. We were vying to lead one of their rounds, and we actually committed to donating a portion of the proceeds if and when Loyal goes on to be massively successful. A portion of Collaborative's profits will be donated to a senior dog rescue in San Francisco called.
You guys are the best.
And it was like, it gets back to that first kind of for profit and for good. Like when you align the interests of the founders, the investors, the mission, there's some magic in that. So yeah, a lot of fun stories, and we could spend, too much time talking through all of those. We didn't even touch on Scopely and others, but so much fun. Scopely, Walter is a machine, and built one of the craziest businesses around.
LA business, right?
LA based. And again, we were one of the very first investors in the business and had kind of a front row, to kind of building that business. And the games business obviously is super competitive, but they've executed so well, and obviously had a huge exit recently.
Totally.
And it's fun because maybe one final note on that is, most of those businesses that you listed, when we invested, the most common criticism was either you're investing into a small market, right? It's like pet food. How big can that market actually be? And is that venture backable? Or even with Scopely, it's like, well, the games business is so mature. Is there really room for another big player? I think one of the through lines to collaborative success has been pursuing opportunities that don't pass that like huge market, huge TAM, huge opportunity. It's almost going in the opposite direction, looking for the things that seem almost niche in the moment, that like in hindsight they build either by expanding the market or by taking market share into kind of multi-billion-dollar business. So yeah,
I love it, and I want to expand on that point in particular, this concentration piece. Beyond Meat was a big bet for you guys. Very big bet.
Yep.
Can tell me the story of Beyond Meat. Tell me, how big was the check?
Yeah.
What percentage of that current fund you were deploying out of was the net of that. Beyond Meat.
Beyond Meat's a fun story. Yeah, I mean, let's abstract the company for just a second to talk about the size of the check, the concentration, because I do think that's the more interesting part of the story. This was many years ago. We were investing out of a $25 million fund, so a small fund.
Was that a fund 2 or a fund 3?
Yeah, fund 2. And we got conviction on this plant-based, burger business.
Yep.
And again, it kind of ties back to that better for me, better for the world. One of the things that we talk about or that we use as kind of a defining characteristic of our investment thesis is something we call the villain test. So it's this notion that like if everything we're investing in is trying to push the world forward, okay, like would a villain invest alongside of you or would a villain buy the product? And by asking that second question, you're ensuring kind of like a much bigger opportunity in the sense that, humans are naturally self-interested. We don't want to sacrifice. We don't want to sacrifice in the car that we drive. We don't want to sacrifice in the clothes that we wear. We don't want to, we all have, or most of us have an inclination to do something that's positive, but not if it comes at a sacrifice. So, the easiest, I think, manifestation of that villain test is a company like Tesla, right? So like the better for the world side of the Venn diagram would be something like the Toyota Prius. It uses electric, it's better for the community, but it's not the coolest car. You're not like pulling up in a Tesla to pick up your hot date and like feeling, great about your ride. Yeah.
Sure.
But when you step into a Tesla, it's a machine. It's like it gives you goosebumps. The first time that I got into a Tesla, I was like, all right, this thing is fast, it's beautiful, it's bold, it's sexy. It really aligns those interests of like better for me and better for the world in a way that doesn't feel sacrificial. In the case of Beyond Meat, it was like they came in and pitched us, and here they're talking about, oh yeah, for our burger patties, we use X amount, like fewer gallons of water. There's no, animal, there's no animal slaughtering. It's better agriculture, no methane emission. And I'm like, yeah. Let me taste it.
Yep.
Because I'm going to put my villain hat on, and if it doesn't taste good, it doesn't matter. It doesn't matter. Like all these really wonderful things don't matter. So, that's how we kind of gained conviction. It was the first, I grew up eating veggie burgers at home. Obviously veggie burgers have been around for decades.
Totally.
But they tasted like cardboard.
Yep.
It was like Morningstar, like my mom would make it. It was like, oh no, here we go again. And yet the first time I tried Beyond Meat, I was like, all right, like this is something that I think Tesla really hit that bullseye, and a Beyond Burger was pretty darn close. It wasn't quite there, but pretty darn close. Whole second chapter of that story is, that market, the market cap of that business has come way down. Plant-based foods have gone through a really difficult period. The second chapter, but for me, that really speaks to kind of the unit economics of the business.
Totally.
And like the cost of those burgers, more so than the like central concept, that intersection. So
100%. 100%. I think it's a great story to hear. And I think it speaks to a lot of funds right now. I meet with a lot of emerging managers, and when they speak about the model, I think a couple of themes are coming through. The biggest theme is ownership. Focus on ownership early, high conviction, want to be first in, ride the winners kind of thing, right? So I think you're ahead of your time on that Beyond Meat deal in particular, but let me hit this. So today, over $1 billion assets under management. You closed a $125 million Fund 6 last year. I put a graphic out a couple of months ago showcasing VCs that were started since 2010 that have raised at least 4 funds. Less than 20% of venture funds that started, and this is pulled from PitchBook. I candidly think it's significantly lower than this. But less than 20% of funds make it to a fund for, let alone doing that in 6 funds in 15 years, which I think is pretty remarkable. And this was done primarily as a seed fund, right? You like to be first in or seed. Is that where you stay? Do you go upstream ever? Or what does that look like?
Yeah, great question. Part of our DNA, I think that the venture world has kind of bifurcated as of late. You've got, these monolithic mega funds that have raised billions and billions of dollars and grown in ways that I couldn't have even imagined, when we started Collaborative. And then you've got other kind of specialist funds and more emerging managers. I've always, part of our strategy has been to kind of stay size limited. I think it creates more alignment with your LPs in the sense that, you get paid as an investor when the returns generate kind of the income as opposed to the management fees. One of my mentors is a guy named Tom McMurray. He was a GP at Sequoia early on from 1990 to 2000, and he kind of has beat that drum. He was one of our earliest investors.
Awesome.
As an LP. And his whole thing is, Craig, stay small, stay nimble. It gives you a lot of flexibility, easier to get to that, 3x, 4x, 5x plus net DPI. To your point about the funds, the number of funds that have gone on to raise at least 4 funds and using PitchBook data, I also recently read from PitchBook data that a very small number of funds get to a 3x net DPI. And the net piece is actually important because that means you have to get significantly above that on a gross basis.
What does gross typically look like to get there?
Yeah, it depends on the fund size, but you need, let's call it another 20% above and beyond. So if it depends on how much fees and what your carry structure looks like, but it's not getting to a 3x net DPI is tough. And I think, the number of funds who have done that is, again, relatively small. According to PitchBook, let's call it, less than 20%.
Wow.
Number of funds who have done it twice, 2 of their funds have gotten above a 3x net, is now you're getting down to the single digits. And the number of funds who have done 3 or more, now you're into like 2% of all funds in PitchBook. So it's a very, and that's for us, if the true north is generating a multiple on capital on a cash on cash basis, staying small has been kind of, part of our strategy from the get-go. And that's allowed us to kind of, raise consecutive funds. And obviously having real returns like the ones that we talked about earlier is kind of catalytic for that.
Amazing.
Yeah.
6 funds in 15 years is great velocity. It's kind of like right down the fairway when folks speak about fund cycles and all of that. So that's super exciting. You had mentioned a notable early investor of yours, and I'm working a lot with the emerging manager community. I don't think a lot of them are trying to hire a partner right now. So what I'm doing is trying to get just valuable nuggets of wisdom or provide value in some way, shape, or form. One of them is we're curating this LP network.
Yeah.
I think the through line after talking to a lot of emerging managers is the frustrations around fundraising, particular at Fund 1 or Fund 2, LPs saying, hey, I'm really interested in backing and writing a check into a Fund 1 or a Fund 2. They have the call. It's clear as day. Not a world that they were going to give them any money. They wanted to start a relationship for allocation in Fund 4. One, did you experience something similar when you were raising Fund 1 and 2? Any folks that you want to call out who you're just genuinely grateful that they believed in you and came in?
Yes. And Alex, I know you know this because you and I have talked about it quite a bit. And like, I think you're doing such a huge service to kind of this ecosystem and emerging managers, because I do think that the narrative can be really discouraging at times. And again, you and I, as friends, we've talked about this before, but it's great to kind of bring it to the surface. I think that raising a fund is incredibly difficult. I think there's kind of an unspoken element to it in that a lot of people who are able to raise fund ones either spun out of like a bigger platform, and so they utilize that as kind of their launch pad, or they've got some connection, whether it's through a family member or otherwise, that kind of helps seed them. Very hard to start kind of flat-footed unless you have one of those kind of unfair advantages.
Yeah.
And I do think that the one piece of advice that I try to give is just get started. There's this misconception that unless I can raise, 20 million, 50 million, 100 million bucks, like how do you get started? I think that if you can raise $2 million and just start putting some points on the board, momentum begets momentum.
Love
and
it.
yeah, and I think that it can be such a barrier. We read about every day, we wake up, we, look online, and it's hard not to say, such and such fund just raised another 100 million, 500 million, $1 billion fund. It can be really intimidating. And I think when I started Collaborative, one of the things that I look back on was just a notion that I was committed to doing it no matter what the size of fund one was going to be. I was like, even if it's just my own money, I'm going to do it. So like no amount of no's kind of discouraged me away from pursuing it. I was just like, I'm in. Like
Awesome.
if you're in with me, great. And if not, it's okay, because I'm going. And
Totally.
even if, and so that, I think this like removing the like, well, it's too small, it's too small. No. Take that off the table. Just get started. Even if you're writing very small checks, I would be completely remiss if I didn't. I have so much gratitude around the people who backed me and Collaborative really early on. I mentioned Tom McMurray. He has been, forget about the dollars that he committed, the early days of Sequoia and kind of what he saw there around how to fundraise, how to be more concentrated, keeping your fund size, aligned with your LPs, and also how to think about hiring. How do you think about who you bring around the table? Those things really, it's like this analogy of a tree and those roots. If you get that right, if you can find the right people that, kind of take a bet on you early, both in terms of our investing capital, but also your hires.
Totally.
The first associate you hire, the first principal you hire, the first partner you bring in, that stuff defines the future of the firm in a way that is in some ways more important than the capital source. So yeah, I mean, I have so much, but beyond Tom, gosh, I mean, another one of our early LPs was Nicholas Negroponte, the founder of MIT's
Wow.
Media Lab. And he was actually the one who introduced me to Whoop, the company, before it launched. They didn't even have the name Whoop yet. It was called Bobo Analytics.
Oh, wow.
And
Bobo Analytics.
Bobo Analytics. And the sound that your heart makes is bobo, bobo. And like, so anyhow,
And that came out of MIT, and that's how
he actually Will spun out of Harvard, but it was in that Boston community.
Yep.
And Nicholas was
Smart
like,
community.
yeah, this is a really, sharp guy, and they're onto something. And so I do think that's just one tiny anecdote of like bringing in the right LPs, the right people, regardless, again, remove the like, what's the check size? I think we're hardwired in today's venture world to be like, here's the, you got to get a university endowment. You've got to get like, these are the fund of funds you hear about, and remove all that. Just find people who believe in you and get started. And that's the name of the game. And I think some of those people are going to have an outsized role in kind of what the future of the firm looks like. So, yeah.
When did institutional investors start coming into the mix for Collab, or when did you like intentionally start when you thought about fund composition, trying to include institutional funds?
Yeah, it wasn't really until Fund 3 that we had real institutional capital come into the fund. I've got a funny story. I don't know.
Let's go.
Okay, so there was a university endowment who was doing diligence on another manager, and they called a startup company to do their diligence. And the founder of that company said, yeah, like that manager has been great, but you should really look at this emerging manager called Collaborative. Like they're one of my favorites to work with. It just so happens the individual from the university endowment's name is Simon Cowell, like the guy's name from American Idol.
Sure.
And so he said, "Oh, that's interesting. What's this Collaborative Fund? And would you share the contact information? Who's the founder?" So the founder shares my contact information, but then forgets to mention to me, "Oh, like I spoke to this university endowment and I referred them, so they may reach out." So out of the blue, I get a phone call, and it goes to voicemail. This is obviously, many, many years ago, over a decade ago. And there's a voicemail from a British guy saying, "Hey, it's Simon Cowell.
Get out of here.
I'm interested in Collaborative Fund." And I'm thinking, is this like one of my college buddies like playing a prank? What's
Totally.
But fortunately, I responded to it, and it wasn't. The guy's name was Simon Cowell, and he worked at a university endowment.
Wow.
And like, so you just never know kind of, how these networks move and who's going to get referred and through whom. But yeah, Fund 3 was really the first fund where we had real institutions, lean in and invest. And that was a big, again, it's like getting, those very first investors who were all individuals or family offices in Fund 1, such a huge hurdle. I'll never forget the feeling of, that first check, and just the belief. I went to school with a guy named Lee Fixell. Do you know Lee? Yeah, he was at Tiger. He launched his own firm now called Addition. He's one of the smartest, most amazing investors. And we went to school together, and he was one of the first backers of Collaborative. And I can still, 15 years later, I remember vividly that, just the feeling of having, somebody bet on you early on. And
Totally.
But in Fund 3, getting an institution on board, it kind of recreated that feeling. It's like a whole different type of underwriting. But it's the feedback loop on that is really, really great. And those relationships, when you can generate good returns, those relationships really persist, so, yeah.
Bless it.
Yeah.
I love it. I want to talk about some of the specialized vehicles.
Yeah.
So you guys are doing a bunch of really cool things, especially around AI, particularly around this partnership or collab with Sesame. Can we actually start there?
Yeah. Yes.
Collab and Sesame. Can you expand here?
Yeah. I mean, so actually, I'm going to take us one step back even further.
Please.
And I feel like, this is something that I talk about, maybe too frequently, but it's, I think, part of our ethos or our DNA. I love graffiti art. I love street art. And it was something that I got into as a kid. And it was a way for me to, express myself and experiment and break the rules. And I think as something that kind of faded from, it was like kind of a, in high school, it was kind of a phase for, some of my friends. For me, somehow it transcended that phase. It still is like in my DNA, and thus I think has bled into Collaborative Fund's DNA. And the reason I bring that up is because I genuinely view Collaborative Fund as a kind of a creative experiment, much like a piece of graffiti art. It's not this, something that can be taught in a classroom, getting your MBA, or, working at an amazing firm like, a Bessemer or a Greylock or where you kind of learn the trade, and it's got these very specific rules. I'm like, go out there and paint, this whole notion of like, oh, we're cooking,
Yep.
For me, that's painting. It's like,
Totally.
we each should have our own canvas. And for me, I've always treated Collaborative as a platform to experiment. And some of those experiments are going to work and convert and do really interesting new things that nobody could have, even myself, I couldn't have envisioned.
Totally.
And some of them aren't. They're not going to work out. And that's kind of how graffiti, it's like very ephemeral. Sometimes you paint something, it works out. sometimes you paint something, it doesn't, but it ends up getting buffed anyway. So it's kind of like, all right, on to the next. And that was what led us to do kind of a partnership with Sesame Street. It was like, we had this thesis that technology entrepreneurs are coming of age, starting to have kids. Naturally, they're going to take their skills, their talents, their networks, and apply some of the learnings that they had in building kind of, it's like interesting. The first wave of tech companies were all about building products for yourself. It was like, okay, Mark Zuckerberg is creating Facebook because he wanted to meet people at Harvard. And that's the mythology around it. And it's like, okay, well, now Mark Zuckerberg is married and he's having children. His next wave of innovation may be around creating products and services for them. And so we formed this thesis and we thought, okay, instead of just blogging about it or writing a creative kind of tweet storm, let's partner with who is the most interesting organization in the early childhood development space. And it's like, who doesn't love Elmo Cookie Monster?
Totally.
It's like, so we got introduced to the senior team at Sesame Street, and we cooked up this idea of like...
So like that introduction.
Yeah.
So like how do you, zooming out a little bit, how did you know like who from your network could potentially introduce me to someone at Sesame Street?
Yeah.
Like how did that
happen? Random shout out, but in a prior life, I worked with a guy named Paul Markham. After we worked together, he went on to work with Sesame Street. He worked at Sesame Workshop, which is the nonprofit. And so, he and I kept in touch here and there. He ended up leaving Sesame, but I reached out to him and I said, hey, I've got this crazy idea.
Love it.
And can you introduce me? I'll never forget that introduction, Alex. Like, he introduced me to the then CEO of Sesame Street, whose name was Jeff Dunn.
Awesome.
And he said in the introduction, Craig, when Jeff says jump, Elmo says how high, because Jeff calls the shots, like he's running the show. And I was like, oh my God, what a great introduction. I sat down with Jeff, and he was the CEO of Sesame Street at the time. And, much to his credit, he took a bet on us. He was like, this seems like a crazy idea. We're a nonprofit. We should have no business being in the venture business, but like, I don't know, let's do something here.
Yeah.
And he bought into this creative experimentation. We raised a small fund, $10 million fund. Effectively half of it came from our side. Sesame's endowment put up the other half. And that fund has gone on to be very successful. Again, it's,
incredible.
Over, kind of a 3x net DPI. So it's like, this is one.
Are you still deploying, or is that?
Yeah,
fully
we're fully deployed, but we're still, it's still got a number of active companies that are doing great things. So, but you touched on, more recent, we launched this AI residency program here in New York. We actually launched a fund with a Japanese messaging company called Line years ago. We've done a whole bunch of experiments. The AI residency program is the latest. And again, not to, tie all these things together, but Nicholas Negroponte from MIT, he was really the one who inspired this residency program. He and I get together on a regular basis. And he talked to me about the notion of, there being a lack of kind of creativity and emotion in AI. So much of AI is solving productivity. A lot of what you're seeing these large language models be used for is reduce, customer service calls and like reduce, legal expenses and all these like productivity gains. But there isn't really a space for, creative people to like take these tools and, manifest totally new experiences. And that was kind of the genesis behind MIT's Media Lab. It was like, how can we create a hacker space for like the bandits, like the people who, could take this new technology and do something weird with it. And so we tried to, take that same ethos, that same spirit, and we partnered with a group here in New York called Fictive Kin. We got a space in Brooklyn. And like, that's what's going on. Like if you and I go over there later today, it's like, it's awesome. It's like the energy of, these people kind of taking these technologies and creating whole new experiences is like, it's invigorating. So yeah, let's see. We call it AIR for AI residency, and yeah, and we're
And you just finished the first cohort, right? August 29th?
we just finished the first cohort, and two of the companies in the cohort are like going gangbusters. Like one of them is growing like a weed. It's like
Amazing.
yeah, we really I
All
think
consumer?
almost all, yeah, all consumer. And I would say within consumer, very specific use cases. Like with our first cohort, we were kind of most interested in backing kind of design-led startups. So like ones
Interesting.
that were taking some of the best designers from the community and giving them some capital and resources to just let them paint,
Interesting.
And yeah. And so, yeah, we're going to launch cohort 2, later in the fall. But yeah, we'll see. AIR is a really, really fun experiment.
I have a friend, Brandon, Jacoby's actually in New York. Best designer I know, period. One of the best on the planet. I'm going to connect you guys. He just came to mind. I think that's really interesting. You had a crypto spin out too in 2018.
Yeah.
Collab in currency.
Yes.
Right?
Yep.
What was that about?
Yeah. Yeah. So, I mean, the short version is, we started just through our network, we started seeing some interesting deal flow in the crypto space. This is back in 2016, 2017. It became clear to me that this wasn't just another category for us to invest in, like in the same way that consumer health or fintech. It was fundamentally kind of its own thing, and it required a special skill set and kind of, passion for that space that we couldn't just layer into Collaborative Fund at that time. So I've been friendly with a guy named Steve McKeon for 20 years. He was kind of my go-to person in that community. He's brilliant, PhD in economics. He understands, certainly from an academic standpoint, but understands, how blockchain technology and some of these newer crypto innovations are going to impact the broader economy. So every time we saw a deal, I would lean on him. Hey, Steve, have you seen this? What do you think about it? How does this fit into the ecosystem? And long story short, we decided let's raise a dedicated vehicle. So it gave us a way for us to deploy more capital into an emerging space, empower Steve, who I think is absolutely brilliant. And there were some of our LPs that were like very excited about crypto and wanted more exposure, and other LPs who were like, I don't want to touch this thing. It doesn't, I don't understand it. I don't want exposure to it.
Totally.
So it gave us an opportunity to kind of keep our flagship fund, let's call it pure, so that for those LPs that didn't want exposure, we aren't making any crypto investments out of the flagship fund. And for those LPs who really wanted more exposure to crypto, now they had a dedicated vehicle. And that's gone on to be really successful. We spun that up. Collaborative kind of helped seed the effort, our LPs. Steve brought on a partner, and and it's done really, really well. Performance-wise, they're doing amazing stuff, and Steve and Derek are just the best of the best. So different strategy. You look at something like Andreessen Horowitz, and they've got A16Z crypto and kind of Chris Dixon. Different people have kind of pursued different strategies. For us, Collab Currency was sufficiently separate, its own investment committee, its own set of LPs, but yet kind of shares the broad ethos, that notion of kind of the intersection of for profit and for good, and mainly around kind of consumer innovation.
I love it. Yeah, I think crypto Web3 is like, I think there's a couple of sectors in venture that are just like really hard to win in. Healthcare, cyber, Web3. It's tough to be like a generalist seed investor and win the best in the category.
Totally.
There, right? So a couple of things. The on the specialized vehicle, I love the experimentation you're doing and just like that DNA all across the fund. I feel like Nucleus shares a lot of that with you, right? Like I joke, Ramp has the CFO. I have the emerging manager. Nucleus has the emerging manager. Mason's in the room with us right now. He joined. This is week 2. for Mason. He probably thinks I'm a psycho with all these initiatives and I'm spinning around.
It's the best. It's the
but
best.
yeah, no, I'm glad you're talking about all these experiments.
I think
that you're
it's
doing.
why you and I clicked.
Totally.
Honestly, like I do think that some people just have that experimental kind of gene in the gene pool. So I love it, and I love what you're doing. So yeah.
No, thank you so much. I re-listened to an Invest Like the Best episode filmed recorded in 2016 with you and Patrick.
Yeah.
And I totally recommend folks going back listening to that. You went a little bit deeper on some of the early backers you had, and I think the theme there was just like wildly successful entrepreneurs who backed you, and I would imagine helped advise and were great resources for you getting up and running.
Totally. And maybe it's worth just, I know we're limited on time, but Chuck Templeton, the founder of Open Table, just like an amazing human being. I mean,
so how do you get to someone like Chuck?
Chuck and I were introduced through a mutual friend, and similar to you and I, we just hit it off. Like he's somebody where that notion of the intersection of for profit and for good isn't a foreign concept. Like it's how he lives his life. Like he ends every single email he sends ends with a line. I'm going to butcher it, but it's something along the lines of, if everyone acted the way that you act, would the world be a better place? And it's like a thought-provoking way that, you're like, well, makes you think about your actions, and in a way that like that's part of his email signature. Most people's email signature is like, oh, we're hiring, or or check out my latest interview, whatever it is. Chuck is like infusing his values into his everyday life, and like not in a sacrificial way. This guy is an Iron Man. He's like a total badass. So anyhow, yes, yeah, you're right. Like some of the early backers in Collaborative, Scott Heiferman from Meetup, Ron Gonin from Recycle Bank, and now Closed Loop. Like I was so lucky. We were, blessed to have like an amazing group of people who have helped shape this thing. Really. So,
totally.
Yeah.
I love it. And listen, like if I'm a founder, particularly a founder building in consumer, and I'm thinking about starting the process for raising a seed round, right? I think the thought of going with a fund that has those types of folks in orbit and knowing that they've certainly helped shape along the way is something that to me at least would be super appealing. The team today has 12 investors, 18 total on the team. If a founder does go with you, if you guys find the right match, what is that founder, what should they expect from Collab as a partner month 1, month 6, and way down the line? What does that look like?
Yeah, it's a great question. I think the thing that two thoughts come to mind. One is the thing that I really in my heart I feel like Collaborative brings to the table is a genuine commitment to the mission. And I think that transcends really everything else at the business. So it's, we obviously pay very, very close attention to the financials, and part of executing on the mission and seeing that potential is making sure that you're building a successful business. Like if the company goes out of business, then your impact is going to be null. So, but I think it's rare to have an opportunity to really partner with a firm. A lot of firms talk about mission, they talk about that alignment, but it's become somewhat co-opted. It's like it's when we started in 2010, it was this like, what you're doing, your mission a lot, like what is it, and today that's like the norm. Everybody, oh yeah, we're mission-driven investors, and we believe in but the reality is when push comes to shove, I think Collaborative that's core to who we are. And I think there's a reason, there is a reason that I called the firm Collaborative Fund. It's not, it's not my last name or the name of, some, amazing, natural resource, or, you think about Sequoia, you think about Kleiner Perkins, like these are, kind of, I don't want to say generic, but it's the last name of the people who founded it, or it's like a national forest. Or Collaborative was like it was a statement. It was like, here's the values that we're bringing to the table. And I think we do our best to kind of live those values. We don't always get it right. The second thing I think you touched on, but you're not just getting collaborative as an investor. Like you mentioned the team and the team size. You're getting access to some of these OGs. Like it's not unusual for us to bring some of our LPs into the mix in particular companies. So, one of our LPs,
Interesting.
yeah, is a guy named Walter Robb. He was the former co-CEO of Whole Foods.
Wow.
So like we're investing, you and I talked about some of the food related companies. When we invest, we're not just like, me or Guy or Sophie or whoever sitting down with the founder. It's like we're getting them in front of Walter and he's able to share kind of experience from Whole Foods. Some of those OGs, some of those lessons I think are, an added feature when partnering with collaborative. So yeah, those are the things that come to mind.
Is there a formal platform team in place?
No. So I think it's interesting when I think about the really large managers out there, Andreessen Horowitz or other, General Catalyst, like they have built these sophisticated platform teams that they can just create so much value because there's these smart human resources that lean in, help with hiring, help with communications.
Totally.
We haven't. We've kept the team somewhat small and fairly narrow. Like we're not in there helping with, some of those areas other than tapping really, really great partners. So like if and when there are cases where there's a key hire to be made at a portfolio company, that's why our relationship is so valuable. It's like you're somebody I know, I trust, like our friendship kind of transcends, like instead of building our own platform team, we'd rather work with somebody who's kind of best in class. So yeah, that's kind of how we've gone about it.
Your focus at seed, you live at seed.
Mm-hmm.
I think platform starts getting really interesting for like the early growth to through growth investors. So of course, like Andreessen, yes, the gold standard. They were also like really the first one to really invest in it, and so much respect for that team.
Totally.
But I think that, more of the value add, I see more of like the early growth through growth on that side of things. Like the astronomer debacle, right? Like I know, like Allison, I know it was a team effort, but she's the marketing partner, operating partner at BCV. BCV, if they didn't lead, they were certainly significant in the most recent round. Allison was brought in for crisis comms, worked with an awesome team, right? But that's like an example of like oh my gosh, we need to jump on this. We need a pro on the platform immediately kind of thing. So I think that's when it starts making a lot more sense. But I think moving into some rapid fire to wrap up here.
Let's do it.
I mentioned I talked to a lot of emerging managers. This is why I started Nucleus, emerging and breakout managers. When you think about throwing the rope back over, for those folks who are raising their first or their second fund right now, any advice to them as they think about LP composition, or if they're getting a lot of no's and are not super optimistic right now, any words of wisdom or encouragement for that group?
Yeah. Two things. One is, I think the just commitment to doing it regardless of size. We touched on that earlier. I think that's a huge unlock. And so I would just hammer that. Like I would just really, really push through. Hey, it doesn't matter whether I raise $1.5 million or 8 million or 10 million or 100 million. Just, I'm going to get started. I have a commitment to just doing something. I think it sounds cliche. It may sound trite, but it's true. I think there's an unlock there mentally when you cement that. Most people go about it and say, I'm only going to do this if I can get to a minimum size. Otherwise, like the economics don't work. I don't have the management fees and it feels too small. And I think that's, if I had a magic wand, I would remove that. I would say, stop, take that out. So that's one. Two is I would get on a plane. I think the US LP ecosystem is in a weird spot right now. I think that there's been a lack of liquidity. I think so many US LPs kind of got over-indexed into venture because there was such a bull run for the last decade. A lot of people were making money in kind of the traditional enterprise SaaS. You had a healthy IPO market up until, kind of COVID. COVID kind of sent everything into a tailspin, and really the markets, I'm oversimplifying things, but the markets have been very stingy. And it hasn't been until very recently you see Figma's IPO and a couple of others where LPs are starting to get some returns, actual cash returns.
Yeah.
And so the US LP market is a tough one. Get to Europe, get to Asia, go to Latin America. Like, there are pockets of capital that are not over-indexed in venture. In fact, they're looking for exposure. And I think there's opportunity to fish kind of in different ponds that oftentimes emerging managers, overlook. They're just focused on the same 3 fund of funds
Yep.
that you and I know,
Yep.
the same names because they read about it in a blog post, and they think, well, geez, and it's like, man, it's really tough to break through those names unless you've got some hook that makes you stand out in a crowd. Whereas, in other parts of the world, you're opening a door to them that most people don't have access to. So those would be my 2 biggest piece of advice. Obviously it's expensive, but like, get on a plane, get introductions to some folks in international markets, and just like commit to doing something regardless of size.
I think the over-under is on email inbounds to Mike at Sandana from emerging managers on a daily basis.
I think he's built an incredible.
25?
Yeah, I think that's fair. I think that's fair.
No, I'm just kidding. I think it's really interesting. I mentioned we're curating that LP network, and I've been at, like, we put a graphic out, and the amount of inbound from APAC, mix of sovereigns, mix of high net worth family office, a lot of family offices, folks in Europe. I'm gonna stretch in Israel there. It's pretty incredible in appetite, particularly for emerging managers, which I think is really interesting.
I do too. I love that, by the way. I love hearing that, and I think that's the best encouragement you can give to an emerging manager, is kind of exposing some of that demand, because without that, the no's can be hard. You're like, geez, I've had 8 pitch meetings and I'm kind of hearing the same thing. And so, yeah, I think making people aware of that pool, that like product market fit, is super empowering.
All right, last one.
Okay.
Looking ahead, where are you most excited about as we think about the future of the Collab Fund? You mentioned a lot of consumer AI.
Yeah.
What are we most excited about today and kind of looking forward for the firm?
Yeah. I think 2 things get me most excited. One is everyone's talking about AI. It's impossible. It's a platform shift like we haven't seen, certainly since I've been investing. Inevitably, it's going to expose some areas that get overlooked, right? So if I oversimplify things, I think the first battleground was really in the, let's call it, large language models and infrastructure. I think the second battleground was really in the enterprise. It was like, okay, we've got a lot of smart people. The center of gravity is in San Francisco. We understand how these enterprise SaaS businesses grow and how to value them. I think the third battlefield that we just now are starting to see is in consumer. And it's a really interesting, just as like a historian and an interested observer, you've got Meta investing ungodly amounts of money to try to own this space. And it's tough to compete. It's like, it's not a difficult kind of prediction to say that they're going to be a dominant force in consumer AI, but I think we're going to be surprised. I think there's going to be a whole bunch of use cases that, that people underestimate, that they think like, oh, that's not venture backable, or the LLMs are going to subsume that. Like, it's And that's what gets me excited. I think exposing some of the stuff that comes out of our residency program, and I think other programs as well, that like on the surface, you're like, really? Like, is that really a use case? Is that scalable? I think that is what gets me most excited about what's happening in AI right now. I mean, my nephew, who, just graduated high school, is a freshman in college, seeing how he uses AI, it blows your mind in just the like, we haven't even scratched the surface. Like this whole VC ecosystem, echo chamber, we talk about all these use cases, and yet we have no idea. The kids are going to blow it wide open. And I think that's like, I feel lucky that we're in a position to invest. Like, what a time to be alive and to be able to deploy into this. So I think 2025 is going to be a great vintage. I think 2026 as well. So that gets me excited. The only other thing, and I know this is supposed to be rapid fire, is similar to what we did with Collab Currency, where we identified this kind of like area to deploy capital into let's call it the finance stack.
Yep.
That like fell outside of our core flagship early stage venture fund. I lay awake at night. I think about how can we do that in other asset classes, like the collaborative ethos, that notion of investing at the intersection of for profit and for good, doesn't just apply to venture. There's no reason. That's true in real estate. It's true in public markets, like
Totally.
all of these massive markets where I don't think that there is an investor like Collaborative that applies that same villain test and that notion of like, okay, this new building, how is it pushing the world forward? Like there's these like measuring sticks. Is it, LEED certified, platinum LEED certified? There's these kind of, but is it a comfortable building? Does it look nice? Like what's the architecture? Like this idea of applying the villain test is very extensible across other asset classes. And I think that's a huge opportunity. It's kind of like you've done a great job of identifying within the venture ecosystem, but if you really zoom out and you think about like, well, what does the next Blackstone look like? What does the next
Totally.
Carlyle group look like? There is a scenario where, maybe a Thrive or some others kind of build into that, like using almost private equity as a beachhead. But I think there's going to be some other innovative approaches to getting there too, that may look more like, instead of like, let's use music as a proxy. This will be my last bad analogy, but like, think about, Beyonce. She's like, she kind of like used, I don't know, rap and hip hop as like her, primary, and then has expanded into other music genres. I think another approach is almost like Wu-Tang Clan, right? Where it's
Totally.
like they each have their own successful careers, but they work together as a collective. And I think about that with Collaborative. It's like Collab Currency is, Method Man or Red Man. It's like, whereas Old Dirty Bastard, like I think there is a way to kind of align the interests of really talented managers across asset classes that like hasn't been done yet. So that gets
Amazing.
me excited.
And I lied. Sorry. Absolute last one.
Okay. Yes.
Just because you brought up concentration. So concentration, hypothetical worlds here. We have a $50 million fund to fund.
Yeah.
We only back at fund 1 or fund 2. We have to deploy fully into 2 emerging managers right now. What 2 emerging managers are we backing?
Oh God, impossible question. I don't know, Alex, you're better at me than, at assessing that, but like
who's exciting right now?
It's kind of unfair because in a way it's not really, it is a fund 1, fund 2, but he's been doing it for a long time. But I do think Nick Churls with Asylum, I think what he's doing is really, really cool. And I think he's a unique thinker and is high conviction in his investing. So he's somebody who I love working with. And if I was not investing in companies, he's somebody who I'd want to invest in. And then I do think, again, I'm kind of cheating here, but I think Roger Ehrenberg from IA Ventures. He built, I mean, one of the most successful early stage funds of all time. And now he's kind of shifted his focus around something called Brand Detroit, where he's like building out the ecosystem there, and he's going to be raising a new fund. I hope I'm not like spilling the beans here or disclosing anything that I shouldn't be, but like, how do you not bet on him? He's I think one of the greatest investors, certainly of like the last decade plus.
Craig,
Yeah.
thank you so much.
So fun, Alex. Thank you.
I appreciate you.
Yeah, man.
All right, we'll talk soon.
All right.